All right, hi everyone. Welcome to today's webinar brought to you by IronFX. Today's topic is going to be on breaking news and setups. Right. Just want to make sure you guys can hear me loud and clear and see me and see my screen as well. It should be the first page of IronFX webinar series, breaking news and setups. Right. Before we start, let's just go through the disclaimer and the risk warning. Right. Take note that the products traded here are on margin and carry a high level of risk, and it's possible to lose all your capital. Also, take note that the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Right, my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so we're going to take a quick look at what's left on the economic calendar. Right, we've got a couple of things, a few things coming up today and tomorrow. Right, so starting off today during the US session, just before the US markets come online, we've got US GDP data as well as unemployment claims. And of course, tomorrow we've got the Bank of Japan that will be releasing its monetary policy statement as well. So that's really going to create a lot of volatility for currency markets tomorrow, especially for the Japanese yen, right? So the major currency pair like the US yen or dollar yen, and of course the yen crosses are going to be significantly impacted following the release of this monetary policy statement, as well as during the press conference later on. All right, so here's the calendar for Thursday and Friday. Right, take note I'm on GMT time here. So we've got the advanced estimate for US GDP that will be released today, along with unemployment claims. We've also got pending home sales and Tokyo CPI later on today. And of course, we've got the Bank of Japan dropping its monetary policy statement, as well as the press conference by Governor Kazuo Ueda, followed on after. Right, the Bank of Japan likes to keep markets guessing as to when it will actually release its monetary policy statement. So it's always tentative, right? But usually they do tend to release the statement at about 4 a.m. GMT time, and the press conference usually follows 1 to 2 hours later. So generally, I think if we look around between 3 to 4 a.m. GMT time, that's where we can expect the Bank of Japan to release its monetary policy statement as well. So as you can see here, at the previous meeting in March, they raised their key policy rate from negative 0.1%, bringing it up to neutral, right? So currently, the key policy rate in Japan currently stands between 0 and 0.1%. It's in a range rather than an absolute level, right? 0 to 0.1%. So they've actually raised it by 10 basis points from the previous meeting. So it was the first rate hike in Japan since 2007, I believe. Right. So we'll get on to that. We'll talk about that a little later on. But first, we look at US GDP and unemployment claims. Right. So this is US GDP growth, quarter-on-quarter growth on an annualized basis. As you can see here, the second half of 2023 saw very strong growth or very strong economic activity in the US. In the third quarter of 2023, we saw GDP growing at about 4.9%, I believe, or 4.7%. And in the final quarter of 2023, we saw GDP growing at 3.4%. Now, the first estimate or the advanced estimate for the first quarter of 2024 is showing GDP growing at 2.5%. Right, it is still pretty steady. It's still another quarter of steady month, still another quarter of steady growth, but it's at a slightly lower rate. You can see that this was about 4.9%, 4.7% in the third quarter of last year, and in the fourth quarter of last year, it was growing at 3.4%. So although the economy is still chugging along, the current first quarter growth is expected to increase at a slightly slower rate. But nevertheless, we can see the US economy has been pretty resilient since the third quarter of 2022, right? So we also have there's a website by the Atlanta Fed as well, which has a GDP Now model. So this model is updated on a weekly basis, I believe, if I'm not mistaken. Yeah, every week it's pretty much updated. So currently, this model is telling us that the first quarter growth for GDP in the US is coming in at 2.7%. right? So this is slightly higher than the current forecast for the advanced estimate, which is 2.5%. Now, so should we see an actual the result come in a little bit closer to this model here, that means it's going to be higher than the original forecast of 2.5%, right? This could signal, or this could trigger a potential stronger demand for the US dollar, right? So take note, should we see the advanced estimate come in higher than the forecast of 2.5%, perhaps coming close to matching this GDP now model of 2.7%, right? It could potentially trigger a strong demand for the dollar, right? So that means the dollar index is going to rise. And of course, currency pairs like the euro and the pound are likely to fall. Right. Later, at the same time, we've also got unemployment claims that will be released. So if you look over the last 8 weeks, unemployment claims have been averaging around 240,000. Right. So unemployment claims is a metric that measures uh, the number of Americans that are filing for unemployment benefits. So if you have been laid off, right, then you are likely to come and apply for unemployment claims. So when you have a when you see claims rising strongly, as we saw in like the second quarter of 2023, if you see claims rising strongly and at the same time coming in higher than the respective estimates, this usually signals a potential weakening of the US labor market, and this then would cause the US dollar to typically weaken. Similarly, when you look at the second half of 2023, we actually saw unemployment claims starting to drop, like it, right? It started to trend lower very significantly. And not only was it trending lower, for most of the weeks, right, for the majority of the weeks, the final result was actually coming in lower than the estimate, which typically signals a strong and resilient labor market, which in turn has a positive impact on the direction of the US dollar, right? So as you can see here, the current forecast is about 214,000. And if you look at the data over the last 8 weeks, unemployment claims have averaged around 214,000 as well. Now, should we get claims that are uh, higher than the forecast of 240,000, this is quite likely going to function as a bearish catalyst for the US dollar. So that means currency pairs like the euro, pound, Aussie, and Kiwi are likely to rise, along with gold prices. Conversely, if claims come in lower than 240,000, that means you have less people filing for unemployment benefits. This is typically going to function as a bullish catalyst for the dollar. And of course, that in turn would cause euro, pound, Aussie, Kiwi, as well as gold prices to fall. Right, so take note, we've got a forecast of 214,000, and this is how we can interpret the data. Right, so since we've got two key pieces of uh, data out of the US today, right? Advanced GDP as well as unemployment claims. If both of these data points uh, result in a bullish catalyst for the dollar, we're very likely to see the dollar index rise very strongly later today. Right. Then coming up next, moving on to the Bank of Japan. Right. So we've got the monetary policy statement that will be released tomorrow, followed by the press conference by Governor Kazuo Ueda. All right. Once again, the Bank of Japan likes to keep markets guessing as to when it will release its statement as well as the time of the press conference. But typically, the statement is dropped at about usually between 3 to 4 a.m. GMT time, and the press conference usually follows about 1 to 2 hours after. Right. So take note of that. So as you can see here, since 2016, Japan has kept its key policy rate at negative 0.1%, and it finally raised it at the previous meeting, raising it by 10 basis points to bring it up to neutral. So the current policy rate stands at between 0 and 0.1%. Right, so this was the first interest rate hike by Japan since 2007. Now, could we see them raise rates again tomorrow? Maybe we could, right? Why do I say that? Right. Okay, when we look at inflation data in Japan, on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized basis. So if you look at the inflation, the trend or the direction of inflation in the last quarter of 2023, we saw inflation move down quite sharply, both for headline CPI as well as the core CPI, right? You can see the green arrows pointing to a slowdown in the rate of increase of CPI for both headline CPI and core. However, in the first quarter of 2024, we've seen a re-acceleration in inflation for both the headline and core readings. Now, should inflation start to pick up in Japan, right? and remain elevated, this is quite likely going to push the Bank of Japan to continue raising rates as well, right? Not only has the Japanese yen weakened significantly in 2024, with dollar yen breaking above 155, we are now also starting to see a potential increase in inflationary pressures in Japan as well. So we have two factors that may push the Bank of Japan to raise its key policy rate once again tomorrow, right? Take note, when the Bank of Japan raises its interest rate, right, it is quite likely to strengthen the yen, which has weakened significantly over the last 3 months, and also at the same time by increasing borrowing costs, right, it may help to slow down the rate of increase in inflation as well. So the Bank of Japan could very likely raise interest rates once again tomorrow, and this would mark the second consecutive meeting if they do so. Right, so take note, we are seeing inflation starting to take root in Japan over the last couple of months. And at the same time, with the yen being significantly weak, right? When we look at the dollar yen, we can see it's climbed above 155.50 recently, right? It is a very high level. It's almost like a 30-year high for the dollar yen. So we have two major factors that could push the Bank of Japan to raise rates once again tomorrow. And finally, looking at PMI activity in Japan, this is the composite PMI reading, which consists of the manufacturing and services sectors. As you can see, over the last 4 to 5 months, right, PMI activity has rebounded quite strongly. Remember, a reading above 50 indicates expansion, and a reading below 50 indicates contraction. So the PMI data, the composite PMI data, has rebounded strongly since the beginning of 2024. So we have a strong economic growth as well. So we have strong economic growth, rising inflation, and a very weak Japanese yen. All three factors which could potentially push or nudge the Bank of Japan to raise interest rates once again tomorrow. So if they do raise rates tomorrow, it's quite likely to strengthen the Japanese yen. And that means we could potentially see the dollar yen pull back, as well as the other yen crosses pulling back as well. All right, now with that, let's move on to the charts onto TradingView, and let's start the analysis on the dollar index. Right. Okay. So here I am on the dollar index. I'm on currently on the daily time frame here. So as you can see here, since the middle of April, right, the dollar index hit a new high of 2024, right, climbing as high as 106.51. But since mid-April, it's actually consolidated for in the third week of April, before in the final week is starting to move down in a meaningful way, right? So where could we find a potential support level for the dollar index? Right, let's try and find that. So it's quite clear where the first resistance is, right? First resistance will be this pullback resistance that occurred on 16th of April at 106.37. So that's why we label our first resistance. It's very clear. Right, and just all right, although the dollar index is pulling away from the first resistance, but just to give you an idea of where the second resistance is, it's quite clearly going to be the swing high resistance that occurred here in October and November of 2023, right? We can see the market structure indicating a very significant swing high here, right? It's a strong resistance point, and you can even say that the dollar index made a double top, right? It made the first top in October and then the second top in early November before finally going down, right? So this is a very strong resistance area, which is going to be used to identify for the second resistance. Right, okay, now that we've identified the resistance levels, what about support? Okay, so at least when I look at this level here, previously this level here at 105.93 functioned as a pretty decent pullback support, right? Why do I say that? Right, remember previously this level here at 105.93 functioned as a pullback resistance back in mid-November of 2023, right? As price was retracing higher, it ran into resistance around here, stalling around 105.90 before reversing to drop lower. So what was previously a resistance level could potentially function as support, which it did on 17th of April till the 19th of April. So for over a period of 3 days, this level was functioning as a pretty decent pullback support level, allowing dollar index to bounce a little bit before finally breaking under. So this was previously a support level for the dollar index, which of course has now been broken. Now, this is also a level now that we can use to identify as an intermediate resistance for the dollar index. All right, now what about support? Right, okay, when I look across now, this price level here at 105.02, this points out to me a very significant overlap support level, right? Why do I say that? Right, as price was falling here at the beginning of November last year, right, we see a very strong price action bouncing off this level here, retracing a little bit higher for nearly a week before finally reversing to drop lower. Then, of course, as price was rising up towards this level here, we can see price running to resistance here in mid-February, making a swing high resistance. And then once again here at the beginning of April, running into resistance to make another swing high resistance, right? So we can see three instances where the dollar index has reacted off this level very strongly. So this indicates to me this is a very significant overlap level, which can be used to identify as our first support. Right. Okay, so price is currently falling down as we speak. Now, second support would be identified at this pullback support level here at 104.09. All right. Okay, now why are these support levels and resistance levels important? Right, so you can see the dollar index has been pretty weak uh, over the last few days, right? So if you have been shorting the dollar index, right, we can use this level here, the first support. We can use the level of the first support to help us identify a suitable take profit level, right? So take notes when we are taking, should we have any short positions on hand where we identify major support levels, right? We can use these support levels to help us identify a potential take profit for any short trades that we may have for the dollar index. Similarly, the resistance levels here, like you see this intermediate resistance, this level here would be used to identify a suitable stop loss level, right? So you can see here the top of this wick is at about 105.95, right? So if I was shorting the dollar index, I would be placing my stop loss just above 105.95. So this could be anywhere between 10 to 15 pips. So let's just say I decide to have a 15 pip buffer. That means my stop loss would be placed at 106.10. I have a short position on the dollar index, and I'll be looking to target near the first support as my take profit. So anywhere between 105.10 to 105 itself would be a decent area to identify as a suitable take profit for any short dollar index positions. Right. We can also use a Fibonacci retracement, right? I think there's a couple of retracements that we could use. Right, I'm going to start the first retracement from here. This low on the 9th of April going up to the high on the 16th. We can see that the 50% Fibonacci retracement and 61 aligns quite close to where the first support has been identified. For now, I'm going to keep 23, 50% on hand. And I would identify this as a pretty strong support zone as well. So now that I see that there's a 50% Fibonacci retracement as well that aligns quite close to the overlap support, which is the first support here, right? I'm inclined to use 105.25 down to 105 as a potential take profit zone should I see the dollar index continue to slide lower. Right, so this is how we can this is why it's important to identify major support and resistance levels. So in the context of a short position that if we have one for the dollar index, we would use the support area to help us identify a suitable take profit zone, and we would use this resistance here to help us identify a suitable stop loss level. So like I said, the top of this wick here is at about 105.95. I would place a 15 pip stop loss just above the top of this wick here. So that would mean my stop loss would be at 106.10. And and if I'm short the dollar index, right, then I would target this zone between the 50% retracement and the first support as a suitable take profit level. Right, okay. Is there, okay, then I think we could draw another Fibonacci retracement, this time from here, this swing low on the 8th of March, going up to the high on the 16th. Let's see if the 38 and 60 align well with the first and second support. Yeah, we can see now the 38.2% Fibonacci retracement aligns well with the first support, and we also see the 61.8% lie pretty close to where the second support is. So we're going to keep 38 and 60. And of course, I'm going to highlight this as a zone here for the second support. Right. So we can see here we have run two Fibonacci retracements to help add further significance to the respective support levels here. Right, now let's dive on down to the 4-hour time frame and see if we can fine tune the analysis. Right. Okay, so we can see here as well. Right, previously price found a pretty decent support here, right? Since Tuesday, right? Since Tuesday, price found decent support here at 105.60. So this does look like to be an intermediate support level here, right? We can see once again the dollar index is testing this level here for the second time this week. And should we see a clean break below this level here at 105.60, we're quite likely to see the dollar index slide further towards the first support. Now, take note, we've also got GDP data and unemployment claims coming up later today at 12:30 p.m. GMT time. This is definitely going to impact the direction of the dollar index. Now, as I mentioned, if we see claims coming in lower than the forecast, and at the same time we see a stronger than expected GDP result, this is quite likely going to function as a bullish catalyst for the dollar index. That means we could potentially see the dollar index reverse from its current level and move higher. Now, so if it does reverse and push higher, right, we can then use the intermediate resistance level as well as the first resistance to help identify a suitable take profit uh, zones for any long dollar index trade. So take note, if we see stronger than expected data uh, out of the US. That means we see strong GDP data as well as low unemployment claims. This is quite likely going to function as a bullish catalyst for the dollar. So that means dollar index could very well reverse from where it's currently trading and make a push towards the intermediate resistance. So using this intermediate resistance at 105.92 would be a good area to identify a suitable take profit zone for any long dollar index trades. Conversely, if GDP data is bad and claims come in higher than the forecast, this combination of result is going to is likely going to cause the dollar index to fall, and that means if you're shorting the dollar index, we would be targeting the zone between 50% Fibonacci retracement and the first support as a suitable take profit zone. Right, so take note of how today's data is could likely impact the direction of the dollar index and which are the key levels to look out for as well. All right, okay, with that, let's move on over to dollar yen, right? Since we have the Bank of Japan releasing its monetary policy statement tomorrow. So once again, let's start. Okay, actually, I'm going to start on the weekly time frame to show, actually, I'll do it on a monthly to show uh, how weak the yen has become in recent years. Now, if I zoom out, although dollar yen is definitely not trading anywhere close to its all-time highs, right? But you can see this is a level that was last seen in May of 1990. You can see this is this is a 30-year high in the dollar yen, right? The yen has weakened significantly. So if the Japanese yen is weakening, that means this currency pair, dollar yen, is going to climb higher. So as you can see here, uh, since 2012, the yen was pretty weak, right? It weakened very significantly from 2012 to 2015. So a period of 3 years, the dollar yen was just going up. Then it pulled back and consolidated for a bit. And then from February 2021 onwards, once again, the yen weakened very significantly, causing dollar yen to spike and to hit back again a 30-year high, right? So it hit the 30-year high back first in October of 2022. It pulled back and then it's trading around 30-year highs once again. So you can see these are very elevated levels for the dollar yen, uh, which is generally not good for the Japanese economy, right? So when the yen is weak, that means their imports become more expensive, and that could potentially nudge inflation higher as well. On the flip side, when the yen is weak, the exports are more attractive to the rest of the world, and that could help them balance things out when it comes to the uh, economy side of things, right? However, but a weak yen is not good in general for Japan, right? And we could see the Bank of Japan raise rates tomorrow, right? We could potentially see them raise rates because we see the yen very weak. We also see inflation taking root in Japan, while economic activity is still strong, as highlighted by the composite PMI data. So let's see if the Bank of Japan really does raise its key policy rate at tomorrow's meeting. But remember, when they did the last meeting, I think it was back in February or March, if I'm not mistaken, although they did raise interest rates, the pullback in the Japanese yen was short-lived, right? So, sorry, the pullback in dollar yen was short-lived. So when the Bank of Japan raises rates, the yen becomes stronger. So that means dollar yen is quite likely to fall. However, the last time they did that, or the last board meeting where they raised rates, the dollar yen did pull back a little bit, but that move was short-lived and it continued to go higher. So let's see how it plays out tomorrow as well. So basically, you can see yen is trading to at 30-year highs, right? This is a major resistance level here for yen. For dollar yen at 158.60, right? We can see price making a very significant swing high resistance here back in March of 1990. This is a very significant level here, right? So this is what I just wanted to show the dollar yen on a monthly time frame to give us a good context of how this currency pair has been trading over the years, and also to see how high the dollar yen has actually climbed in recent years as well. All right, okay. So now, right, okay, let's zoom on back down to the daily time frame. So quite clearly, that first resistance that we identified on uh, the monthly time frame, right, is something that we can use on hand. Maybe on the daily time frame, this is quite likely going to be perhaps the second resistance. Maybe I'll adjust it later. But okay, now how would we identify a suitable first resistance for the dollar yen? Right, we can use a combination of Fibonacci projection and extension as well. So let's start with the extension. Oh, sorry, with the projection. So the projection involves 3 points. So start here from point 1, 28 December 2023, going up to point 2, 13 December 2024, and ending at point 3, which is 7th of March. We can see, right, the key projection levels lie at 61, 78.6, and 100%. So you can see quite clearly, dollar yen has climbed above 61.8% and is approaching 78.6, right? So I'm going to use the 78.6% to help me identify the first resistance based on Fibonacci projection. And then that means I would change that swing high resistance that was formed in 1990. I'm going to switch this to my second resistance, which also we can see that the 100% projection aligns very well with the second resistance as well, right? So now we'll get rid of 61.8 and just keep 78 and 100% Fibonacci projections. Oops, oh wait, hang on, sorry. I didn't get the third point done properly. Hang on. Okay, third point is here. Okay, apologies. Somehow my mouse must have slipped. Okay, so wait, rewind. We can only use 100% Fibonacci projection because we've seen price also move above. So, but you can see quite clearly, right, the 78.6% Fibonacci projection did highlight this resistance area as well, right? This was a resistance area for the dollar yen since 16th of April, right? So for a period of nearly 5 to 6 trading days, price failed to break above this level, and it finally did before finally rising higher yesterday, right? So you can see the 78.6% Fibonacci projection did help us to identify a suitable resistance area, right? You can see price really consolidated underneath this level for a period of 5 to 6 trading days before finally breaking higher. So similarly, we could see something like that occur around the level where the 100% Fibonacci projection sits. All right, so for now, let's just keep 100%. Right, I also mentioned we can use a Fibonacci extension levels. Now, to find extension levels, we use the retracement tool. So that means we're going to start from here. This high on the 13th of November 2023, going down to the low here on 28th of December. Remember, the key extension levels lie at 127% and 161%. So let's pull those up. Right. So once again, we can see that price has already broken above the 127% extension level. However, the second resistance, which was that swing high resistance that we had identified earlier, we can see that the 161% extension level aligns very close to this level, to the swing high resistance. So of course, I'm just going to keep 161%. And I would highlight the second resistance as a zone rather than an absolute level, right? So let's just highlight this as a zone, right? So this is an example of how we can use Fibonacci extent retracements to find an extension level, and at the same time use Fibonacci projections to help us identify a suitable resistance as well. So in this case, we're using extensions and projections to help us identify suitable resistance areas. right? Okay, now what about support, right? What about support? Uh, this is a little bit tricky, right? When okay, because as I mentioned, perhaps what remember here, this was previously functioning as a pullback resistance level at 155.68. Remember when we zoom? Okay, let me zoom in a little bit now, so we can see here that over a period of 5 to 6 trading days, this was previously functioning as a pullback resistance before dollar yen finally broke out. So it's not the strongest level here, right? I'll admit this is not the strongest level, but this is something that we can probably use to identify as a decent first support for the dollar yen. So think of it as a pullback support here for the dollar yen, which is at 155.68. Whereas another strong pullback support level is over here at 151.90. Right, we can see previously back in November of 2023, dollar yen running the resistance here, the drop quite sharply, and then in the in the end of March, as the dollar yen started to rise strongly, it ran into resistance around this level as well, uh, being kept under this level for a period of nearly 2 weeks before finally breaking higher once again. So what was previously a strong pullback resistance level is quite likely going to function as pullback support in the current context, right? So this is how I've identified the major resistance and support levels for the dollar index, for the dollar yen. And of course, if we see uh, strong GDP data today and low unemployment claims, that's quite likely going to cause dollar yen to rise even further. So if that were to happen, we can use this first resistance here, which is the 100% Fibonacci projection, to help us identify a suitable take profit zone for any long dollar yen positions that we have. And of course, this support level here at 155.68 will help us to identify a suitable stop loss level as well. So by placing the stop loss maybe 10 to 15 pips underneath the first support level, and should we see the data function as a bullish catalyst for dollar yen, and we see it continuing to rise higher, right? I would then target the first resistance at the 100% Fibonacci projection to help me identify a suitable take profit for the long dollar yen trade. Right. Okay. Let's move on down to the 4 hour time frame and see if we can fine tune this analysis if necessary. Right. As of now, no, probably not. I think this is given how this currency pair is currently trading. Right. I think this is these are the best levels that I can identify based on today. Right, using a combination of price action, Fibonacci analysis tools, right? I think this is the best levels that I could identify on the daily and 4 hour time frame as well. All right, okay, so that's what we have for dollar yen. All right, okay, next I'll move on to cover the rest of the major currency pairs. We'll touch on commodities as well and the indices too. And of course, if you have any requests for any other currency pair or indices, right, do let me know early on, right? Do drop your request in the chat box or the Q&A box, and I'll be more than happy to go through the analysis with you. All right, okay, then let's move on to the euro. All right, okay, let's start with the euro. All right, okay, so once again, let's start the analysis on the daily time frame. It gives us a good perspective on how this currency pair is currently trading. Right, of course. Right, that's all right, Emerson. Yeah, sure. Okay, so once I cover the euro, we'll move on over to the Aussie as well. Perfect. Yeah, definitely. All right, great to see the request come in. Right. So of course, if dollar index has been falling quite strongly this week, then of course currency pairs like the euro, pound, and Aussie, of course, would be rising as well, which is what we currently see, right? So quite clearly here, this is a strong support for the euro at 1.0618. You can see price making a very significant swing low bounce of this level here. This is a significant swing low that occurred, highlighting the strong support area. And of course, with price running into resistance here, this pullback resistance at 1.0862 is a major resistance level here. But of course, we're trying to see if there's anything in between that we can highlight as well. Right now, previously, right, we can see that this level at 1.0709 or 1.07, yeah, 1.0710 previously was a pullback support or swing low support, right? We can see the market structure showing us a very significant swing low bounce, right? That occurred on 14 and 15 of February, right? This is a very significant swing low, telling us there's a strong support zone over here. So what was previously a support zone could potentially function as resistance as price was rising up, which it did, right? We can see here on 23rd and 24th of April, price stalled around 1.078, right? It failed to break above this level for a period of 2 days before finally doing so today. So you can see how this level here previously did function as a pretty decent resistance area for a couple of days before finally giving way. So once again, in a similar fashion, we can use this swing low here that occurred at the beginning of April to help us identify another potential resistance area. Right, when we look at the market structure here, as the euro was falling sharply towards the end of March, it found strong support here on 1st and 2nd April to make a pretty decent bounce. Right, this then signals to us a strong support level, which unfortunately didn't hold up on the 10th of April, the week later. However, it could now potentially function as a pretty decent resistance area. Right. Okay, we can also run a Fibonacci retracement. Right, we can run a retracement from here, of course. This high on 9th of April going down to the low of last Tuesday. Let's pull up all the fibs. Right, we can see that the pullback resistance that we identified at that intermediate resistance level. We also see the 50% Fibonacci retracement aligned perfectly well with it. So that adds a little bit of, gives us a little bit more conviction that this level here at 1.0742 could be a potential resistance area for the euro. Now, why would I identify this level here? Right, so if we have been long the euro, right, as you can see here, price consolidated over here last Friday, right, end of last week it consolidated, and this week the euro started to move higher. So if you have been long the euro, right, where perhaps you can start considering to take profit would be around the region of the 50% Fibonacci retracement, which is also where this pullback resistance has occurred, right? So you have two factors that point to us a potential resistance zone, and it's always good to take some chips off the table, right? So perhaps this is one level here at 1.0742 to identify as a potential take profit zone for any long euro positions that we may have. All right, now let's zoom on down to the 4-hour time frame, right, and see. Let's see if we can fine tune the analysis. Right, okay, in terms of support, right now when I look across 1.0680, this is a pretty decent overlap level, right? Why do I say that? Right, previously we can see price running the resistance here, and last Thursday it pulled back, ran into resistance once again on the 19th before finally breaking higher on Tuesday. And after it broke higher, we can see the euro pull back, finding support at this level before bouncing once again. So this creates an overlap level, which looks like to be a pretty decent support level to use. So I'm going to highlight this as my first support for the euro. And of course, this pullback that occurred here last week or last Tuesday and Wednesday is going to be used to identify as my second support. Now, as I mentioned, the euro is rising up towards the 50% Fibonacci retracement, as well as this pullback resistance here. And we can also see that the euro is trading within the bearish Ichimoku cloud. Now, usually the Ichimoku cloud, when it's red in color, right, it's indicating to us strong bearish momentum, and the cloud itself can potentially act as a resistance zone as well. Now, this is quite clearly seen here at the beginning of April, right? You can see, although the euro was rising strongly in the first few days of trading in April, however, it did stall just above the cloud, right? Sometimes price can stall within the cloud. In this case, you can see the euro actually stalled just above the bearish Ichimoku cloud before pulling back quite strongly. So similarly, we also now see that the euro is trading within the bearish Ichimoku cloud And at the same time, we see an intermediate resistance level as well as a 50% Fibonacci retracement as well. So we have three factors that are pointing to us that there is a potential resistance area, or there's a potential resistance zone within this region of 1.0742. So we should be aware of that. So that means if we have any long euro positions, like for example, since yesterday, we see the euro making a nice bounce off the first support to climb higher. So should we have any long euro positions here, right? And we can then use this information to help us identify a suitable take profit zone, which is going to be bounded by the Ichimoku cloud, the 50% Fibonacci retracement, as well as the pullback resistance level here, right? So take note, these are the key levels for the euro. And of course, if we see US GDP data and unemployment claims. Okay, if we see strong US GDP data and low unemployment claims, that is quite likely going to create strong demand for the dollar. So that means Euro USD is quite likely to reverse. Now, so if we see that data function as a strong bullish catalyst for the dollar, then we are quite likely to see the euro stall around this region here and reverse to drop lower. And should that occur, and if you see the euro drop lower, we can then use this first support at 1.0680 to identify a suitable take profit zone for any short euro positions that we may have. So take note, the GDP data, US GDP data, and unemployment claims are definitely going to impact the direction of this currency pair as well. And this data, and these data will be released today at 12:30 p.m. GMT time. All right, okay, with that, now let's go on over to the Aussie. So once again, we'll start the analysis on the daily time frame, of course. Right, so of course, if the dollar index has been falling pretty strongly this week, then of course we're going to see the Aussie rising, which is what we are currently seeing over the last 4 trading days. And after finding pretty decent support here last Tuesday at 64 cents, this does look like to be a pretty strong support area here. So this could is very likely going to be our second support. Let's see if we can identify any other level to identify a support level that's a little bit closer to where this currency pair is currently trading. Now resistance also, we can see that this is a strong pullback resistance level here. Right, we can see we can see the Aussie running the resistance in middle of February at around 66.30 before reversing, coming into resistance here again once again on 21st of March, and of course last Tuesday running into resistance. Well, two Tuesdays ago, running into resistance here as well. So this price action as well highlights to me a very significant resistance level. Perhaps this is a second resistance that I'll identify now, and at the same time we can see that we have the presence of the bearish Ichimoku cloud as well. Remember, the red cloud can identify or can function as a resistance zone as well, which is clearly what has happened since the 7th of March. All right, okay. Now, what about another resistance level? Right, there is a pretty decent pullback level here. Right, when I look across 65.37, right, as price fell sharply on Wednesday, 10th of April, we can see on Thursday it retraced higher quite strongly before stalling around 66, 65.40 before reversing to drop. So this level here does look like to have a little bit of resistance as well, which is where the Aussie is currently approaching. So quite likely this could be a pretty decent resistance level to watch out for. We can also run a Fibonacci retracement. Right, so we'll start this retracement from here. 9th of April, going down to the low here on the 19th. I believe it might be the 61.8%. Let's pull up all the fibs. Right, we do have the 61.8% Fibonacci retracement lined up perfectly well with the pullback resistance here. So let's just keep that on. Right, so this is indeed a quite likely to be a pretty strong resistance area. So take note if you have been long the Aussie, right, targeting this pullback resistance, which also aligns well with the 61.8% Fibonacci retracement, is probably a good idea to is probably a good zone to identify as a suitable take profit level. Okay, so these are the key levels here. All right, maybe in terms of support, maybe we've got to go down to the 4-hour time frame and see if we can identify something as well. Right, okay, before I do that, I'm just going to adjust the level of the first resistance. And we can see here, right, this is the pullback that occurred on 11th of April, and it's also within the zone of where the 61.8% Fibonacci retracement sits. Right. Okay, so in this case, when we look on the 4-hour time frame, we can see that on Wednesday, the cloud itself did function as a resistance zone. We see the Aussie pulling back. However, today we see it breaking out of this cloud quite strongly. Right, so take note. But however, I do see a strong pullback resistance level at 65.45, which also happens to be the region where the 61.8% Fibonacci retracement sits. Now, similarly, of course, if we see strong GDP data and low unemployment claims out of the US, it's quite likely we're going to see the Aussie stall around this region and reverse to drop lower. Right now, of course, if the opposite happens, we get a weak GDP print and we see claims coming in higher than anticipated, that's quite likely going to function as a bearish catalyst for the dollar. So that means Aussie is likely going to push higher and perhaps even break above this first resistance here. All right, now what about support? Right, okay, so I see a pretty decent overlap level here at 64.86. Right, we can see previously price running into a little bit of resistance here in middle of April, right? As Aussie was retracing higher a little bit, it stalled around this around 64.86 before reversing to drop lower. Then, of course, after breaking above this level earlier this week, we can see it proceeded to function as a pretty decent pullback support, bouncing off this level on 24th of April, which was yesterday, before moving higher. So this price action here, right, the pullback resistance here and the pullback support here, tells me that this is a pretty significant overlap level, which is what I'm going to use to identify as my first support. Right, okay. So that means now that we have a first support identified as well, so that means should we see the Aussie reverse around the first resistance and we have a strong fundamental catalyst as well, right? That fundamental catalyst could be strong GDP and low unemployment claims. That means we could potentially see the Aussie reverse around the region of the first resistance and drop lower. And should that occur, right? That means should that occur, and if we have any short Aussie positions, I would be using the region of the first support here to identify any suitable to identify a suitable take profit zone for any short Aussie trades. Right, okay, let me see if there's anything else that I can do or use. No, probably not. Okay, so these are the key levels for the Aussie on the 4-hour time frame and daily time frame as well. Oh yeah, hi Trevor. Yes, okay. I always mark the body and not the wick. Yes, that's right. Okay, because I'm looking at the daily and 4-hour time frame. So generally, I'm going to use the body of the candle to mark the resistance. Of course, like you can see here, on okay, this is a bit more obvious. We can quite clearly see here on 9th of April, the wick going above this body. But just to highlight it, I would or to bring attention to it, I would highlight it as a zone. But generally, when I'm using the 4-hour time frame and daily time frame, I would be using the body of the candle to mark the resistance levels. All right. Okay. All right. Okay, Trevor, you said something about reminder coming in late. Okay. Right. Okay. I'll just check with IronFX and see why is that the case. I'm not too sure. Why this happened, right? Maybe I'm not sure if the rest of you can chip in as well and let me know if your reminder was late as well. All right, okay, great. And okay, we've got time as well. So yes, I'll be more than happy to cover the NASDAQ and US 30. I think we've just got time for those two. So let's do the NASDAQ and US 30. All right, so let's start with the NASDAQ. Okay, let's start with DJ30 since I have it already here on hand. Okay, so DJ30, Dow Jones 30. So in some instances, the instrument can be labeled as US 30, but basically here is the same thing. US 30, DJ30 is the instrument that tracks the Dow Jones futures. So for indices, I always like to start on a weekly time frame, right? Because it really gives us a good, clear picture of how this index is currently trading. So quite clearly, of course, we saw the Dow Jones make its all-time high at 40,056. So quite clearly, this is the first resistance here, which is the all-time high, of course, right? And we see price has found pretty decent support around this level here as well. So I'm just going to highlight this as an intermediate support for now, right? And where was previously a strong, where could a strong support level be is here. Why do I highlight 36,500? Right, previously this was the all-time high for Dow Jones, which was formed in November 2021, and then finally in January of 2022. So this was previously functioning as a strong resistance area, which now could be a potential support area as well. Okay, we can also run a Fibonacci retracement. I'm going to start this retracement from this swing low here on October 2023, going up to the all-time high. Let's pull up all the fibs. Right, we can see that okay, the index has already pulled under 23.6%. There is a pretty decent pullback level here. Right, we can see the bottom of this wicks that occurred on in early Jan, as well as last week or 2 weeks ago, sorry. We can see the bottom of this wicks coming quite close to where the 38.2% Fibonacci retracement sits. So I'm going to highlight this level as a zone, right? My first support is actually it's a zone rather than an individual level, right? So we can see, let's just keep 38 and 61. I'll explain to you why I'm going to keep 61%. Right, we can also see that here previously this level here functioned as a pretty strong swing resistance, right? We see price making a swing high resistance here on towards the end of July 2023, right? So what was previously a resistance level here could potentially be a support. And also when I look at that level, it also coincides pretty well with the 61% Fibonacci retracement as well. Now, these are the key levels for Dow Jones on the weekly time frame. Let's see if we can fine tune the analysis on the daily. Right, we can see, yeah, this overlap level here is pretty decent, right? We can see this overlap level is actually pretty significant. We can see price running through the index running through resistance end of December before finally breaking higher, then finding support towards the end of Jan, and of course finding support last week as well, right? It's not the cleanest level. Of course, we can see with the wicks protruding below, it's definitely not the cleanest level, but we can see quite clearly this overlap is indeed pretty significant. So I'm inclined to identify 37,755 as a intermediate support, with the first major support coming in at around 37,000 to about 36,500. And of course, first major resistance is at the all-time high. And now that I see price running to a little bit of resistance at this overlap, I can see there's another overlap level here. I'll highlight 38,588 as an intermediate resistance. You can see previously price finding decent support here in early March and at the beginning of April as well, right? Creating a pullback support level here, which finally got taken out. And as we saw the index retrace higher yesterday and today, retrace higher on Tuesday and Wednesday, we do see it run into resistance once more. So this creates an overlap, which tells us that this is a pretty significant level as well. So these are the key levels to watch out for the Dow Jones on the daily time frame as well, right? So could we see equity markets pull back? Perhaps, right? We could. So since this is a pretty decent resistance area here, right? We may have a potential short opportunity on the Dow Jones, where I would place my stop loss just above this intermediate resistance here, right? I place my stop loss slightly above to give me a little bit of a buffer. And of course, then I would use this overlap support here, this intermediate support, as a potential take profit zone for any short Dow Jones positions that we may have, right? So take note, this is how we can use the resistance level to identify a suitable stop loss. Remember, stop loss is always going to be above the resistance with regards to a short. And when it comes to the stop loss, we're going to be looking, when it comes to the take profit zone, it's going to be around the vicinity of the first support. All right, okay, with that, let's move on over to the US 30. Oh, sorry, NASDAQ. My bad. We already covered US 30, Dow Jones. Let's move on over to the NASDAQ. So in this case, I'm going to use the NAS 100. All right, okay. Trevor, so if I were to go back to Dow Jones, right, where I saw price running the resistance, right? And if I came to the conclusion that there's further downside for the Dow Jones, I'll be using that resistance area. Okay, let me just go back. I'll be like, if I see, I've highlighted this previously as a pullback support, and now as I see price stall around this level and I see it pull back, I'll be looking to see for price to reverse of this level before initiating a short trade, right? So I say let's just say I've come to the conclusion that this is just a retracement that's part of a continuation of a downside action. So when I see the Dow Jones reverse of this resistance level here and start to drop back, this is where I would identify a entry position on the short side. And then I would place my stop loss just above the resistance level to have that little bit of buffer. And because I've identified this as an overlap support as well, this is where I'll be using to identify my exit. So basically, this is where the take profit or the exit point would be identified. Right, this is typically how we would use the support and resistance levels to identify the entries and exits, and of course, stop loss as well. All right, okay, so entry, you can do, okay, since we are doing the analysis on the top view analysis on the daily and H4, then yes, I would say use the 30-minute or 1 hour time frame for entry. All right, now just going to conclude with the NAS 100, right? Let's conclude today's webinar with the analysis on the NAS 100. All right, okay, welcome, Trevor. And okay, so similarly, we'll just start on the weekly again. For indices, we can see quite clearly for the NAS 100, right? This was the all-time high here at 18,467, right? The previous all-time high for the NAS was at 16,768, right? And this was a pretty strong swing high resistance that occurred in November of 2021, which is also where price once again ran into resistance in December of 2023. Of course, now with the index breaking above it, this previous pullback resistance level could now potentially function as support. So of course, I'm going to use this level here to identify as my first support, and first resistance is simply going to be the all-time high. Right, we can also run a Fibonacci retracement starting from this swing low, 23rd of October, going up to March of 2024. Once again, we can see that the 38.2% Fibonacci retracement aligned very well with the first support, and also the 61.8% aligned very well with this pullback resistance level here. Remember, this was a previous swing high resistance back in July of 2023, which could now potentially function as support as well. So this is how we've also identified the second support for the NAS 100 on the weekly time frame. All right, okay, now let's move on down to the daily time frame and see if we can fine tune the analysis. Right, we can also use a Fibonacci retracement on this downward move here, starting from 21st of March down to the low of last Friday. We can see that the NAS 100, the NASDAQ has run into resistance around where the 38.2% Fibonacci retracement level lies, and this is also another pretty decent overlap level as well. Right, we can see here, just let me tidy up things a little bit. Once again, I'll keep 38 and 61. So we can see here at 17,591, there's an overlap level here. Price running to resistance in Jan, finding support in February. And of course, after breaking underneath it, it could help us identify a potential resistance area, which does seem to have functioned pretty well. Right. Also, when I look at where the 61.8% Fibonacci retracement lies, there is another pretty decent pullback resistance level to watch out for. So should we see NAS 100 push higher, right? This does look like to be a pretty strong resistance zone here that sits between the 38% and 61% Fibonacci retracement. So if we are going to see a bullish resumption of the NASDAQ, right, I would definitely like to see the index clear this zone as well. So basically between 17,600 and 17,800 is going to be a pretty critical zone for the NASDAQ. And if we do see that breakthrough occur, then that's quite likely we'll see a resumption of this bullish uptrend. However, for now, it does look like this downtrend, this correction could still play out a little longer, right? With the Nasdaq retreating yesterday, we can see there's a pretty decent descending trend line as well that's currently on hand, right? So take note of that. So this is a pretty strong resistance area or zone for the Nasdaq. All right, okay. Just before we end, right, I'm just going to launch a poll. Truly appreciate if all of you can give your feedback as well with regards to today's webinar. Right, okay, there's a question just to view DXY and S. All right, sure, Trevor. We'll just wrap up today's session by looking at DXY once again. All right, just keep the poll running for a little bit longer before we move on over to the dollar index. All right, great. Thanks everyone for the feedback. All right, okay, now let's move on over to the dollar index. Let's just wrap things up with the dollar index. Right, okay, so on daily time frame here. Okay, let's just finish up on the 4-hour time frame, right? So we can see quite clearly these are the intermediate support and resistance levels for today, right? Since Tuesday, we have seen the dollar index sort of range between 105.60 and 105.90, so 30 pip range, right? Since Tuesday, it's just been moving between these two bounds. So right now, it is testing this intermediate support. And take note of how the GDP data and unemployment claims at 12:30 p.m. GMT is likely going to function as the next catalyst for the direction of the dollar index. Otherwise, these are the key uh, levels for today, right? First resistance, intermediate support, and first support for the dollar index. All right. Okay. Right. So thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IronFX, and I wish you all the best in your trading journey. All right. Take care. Have a great trading week, and I'll catch you all at the next webinar. All right. Thank you.